Charting the dip using death cross signals and Firecharts order book data to pinpoint potential Bitcoin buy zones. Hey guys, it's Keith Allen. I think it's been like a week since I've done a bit break, so I apologize for that, but took a couple of days and went out of town last week. And it's just been overall busy, but we did do a blockchain banner on Tuesday, so we haven't been left in the dark. And I have been doing some X posting, so I've been leaving some breadcrumbs for you. But today, I'm going to take a deeper dive into what's going on in the order book and what's going on in the charts with both the death cross print and a looming eminent death cross coming up between the 21-day moving average and the 100-day moving average. I'm going to start, I guess, as usual, bit of housekeeping and remind you guys, if you haven't subscribed yet, please do me a favor and click that little bell, tick the little bell up there at the top. Make sure you never miss any of the future streams. And of course, if you like the content, do me a favor and smash all the buttons. And another reminder, of course, that live chat is open. So if you want to engage, I'd love to chat with you. Whether you have insights you want to share or questions you want to ask, live chat is open on YouTube. Join me here. And I would love to engage with you. And now let's just climb right in and show you what's happening on the technical side that points to at the very least, a dip, which we're seeing develop now. Whether it develops into a deeper correction or not, time will tell. And but I'm also going to show you some dynamics in the order book that may point to some pretty solid targets here in the range. So let's start on the candle chart, I guess, and I will get that one dialed up here. Boom on that side, and share it here. And I can show you what has developed already and what is eminent here on the Bitcoin daily chart, and we will expand out from there. As you can see, we have already printed, if you will, a death cross between the green 21-day simple moving average and the red 50-day simple moving average. This obviously is a lagging indicator. And relatively, time frame speaking, this is a lower time frame than obviously a weekly or monthly chart. But these tend to, the momentum of these death crosses tends to carry through a bit. We actually just had one recently. It was a shallow dip that gave us a couple of entry points and tests of support here down in this range. And I want to show you this range here that we've been trading above for quite some time, right? Since what? We had the election day Trump pump that took us up here, set a floor at the 86.5 range, and really the top side of that was around 91.5, and we've retested support here at the top of this range almost a dozen times by now, and so. Potentially we could be going right back here, potentially lower. Obviously, you can't rule anything out here in this game, but as you can see, price is degrading a bit as we speak here. And not only do we have this death cross between the green 21 and the red 50, but we also have one eminent between the 21 and the blue 100-day moving average. Now, this doesn't look nearly, yes, there's a dip coming. We can see it developing now, but it may not be as bad as it seems. So I don't want you to panic here. Maybe to give you a little peace of mind, we'll zoom out to the weekly chart, the weekly time frame, and you can see that these are far from crossing, and the trend is well intact here. Right here's the trend line. We have the red 50-week moving average. Somewhat closely correlated with the trend line. It has dipped a bit here on this dip. And what we want to see is it come up higher than the trend line. We also see the 21-week moving average pulling into this range here that I just showed you on the daily time frame. So that's something to be mindful of, as those could potentially come into play here if this turns into a deeper dip or a deeper correction, I should say. So in terms of what my, just from a technical standpoint, what the obvious targets are here is a retest of support here at this 91.5 level. We wicked through it a couple times, so somewhere in this range. And quite frankly, anywhere in this range, even if it went down to the lower end of it, I'd be quite happy, and I would consider this area here to be um, a potential buy zone. So let's even label it that, right? Um, this is going to be, it was my RS flip zone. Now we're going to call it a buy zone. And I think that this is really, a range that has tested several times. It's tried and true, at least thus far. If we wicked below it, it wouldn't bother me. And I would even say that I would probably hold on to entries even if we went down a bit further. Um, so there aren't going to be, in my opinion, probably too many opportunities here to buy below this. Now, if we do see things break down, then obviously the purple 200-day moving average could come into play. Now, I want to see what happens in between here. If we move into the weekly time frame, we again see this green 21-day moving average. This would really be the sweet spot, in my opinion. It would basically mean a wick coming through that 91 level, and that sits now just below. It's at 89 and change. This would all be fine for me, and I would again consider this a solid buy zone. I wouldn't really have concern of a breakdown unless we went past, say, the 50-day moving average, because that brings the 2021 top into play. And if we lose that, then we're dealing with a different set of circumstances. So I'm happy buying all the way down into this range, quite frankly. Now, here's where it gets interesting to me. We have some, a lot of this sell pressure has been absorbed pretty well here. And if we move over to Firecharts and take a look at the order book, we can see that we do have some support here in the near range at 95K, and at least a temporary bounce happening here. But I'm not convinced of this. Yes, we see, there was a pump that pushed price up, and now a dump. By the way, TradFi markets are closed today, so this is an extension of weekend whale games, in my opinion, at least here in the U.S. And so if we zoom out a little bit, we can see that we actually have some secondary support below this. Let's do like so. All the way down to the 90K range, which is obviously where that support level is on that prior channel that I showed you. But you can see we have about 26 million. May not sound like a lot to you, but this is a level of liquidity that does really signify significant support here. In the order book, you can see secondary support down at 92, with some other rungs of a ladder below it, right? So now we talk about that 91 range, right? You have another 17.5 million at 90K. What's that? 16 million at 92K. So this level is actually a little bit stronger. So somewhere in this range would be where that existing RS flip level is, right around that 91.5K range. So I could conceivably see eroding through this. Maybe it doesn't happen today. Maybe it does. Maybe it doesn't. I'm really watching to see if this liquidity changes, right? Is it going to get stronger? Is it going to get weaker? Is there going to be a rug pull? Is it going to get filled? Let's look to see what happens here. Now, I could see a situation where price comes down to this level, and then these brown whales could unload into that because there's enough liquidity there to keep from too much slippage. So be mindful of that. And at that point, I'd look for entries anywhere in this range, right? I'm going to be looking to see when buying returns with volume to make those entries. And there has been a little bit of smoke and mirrors happening amongst the order classes. As you can see, a divergence between that smallest order class, orange or yellow, depending on your color, your color blindness. They've been kind of diverging from the group here lately. And keep in mind that whales can disguise themselves as any other order class, right? If you've got a whale size stack, you can make small trades or you can make large trades. And so a lot of these moves, especially the smoother transition lines. Let me take this tag tool off a little bit so I don't hide it. See, like this. Let me clear them all out. Make it easy to spot here. A lot of these smoother lines, like this angle here, this steep angle of ascent here, this one here. These appear to me to be moments of TWAP, TWAP bots running. Here it is again, and it may be doing the same thing, in these ranges, kind of steady. But I think these are kind of aggressive TWAP sessions that this smaller order class is engaging in, and I think it's happening from whale controlled bots. That said, what ultimately matters is what the volume is and where price goes, and at the end of the day, whales do rule the game. So we'll be watching to see when purple whales, who have historically dominated Bitcoin price, re-engage, and also when brown whales do. Brown has kind of been leading the charge here over the past month or so in terms of buying, but not a ton of volume. And as you can see today, they unloaded quite a bit. So this is something to watch here, right? We're going to watch these order book dynamics and this order flow dynamic, especially to see when buying resumes. So back to the candle chart. Again, this is the zone that I'm very interested in. The bottom of it is at 86.5. The top of it is at 91.5, and we may not even make it all the way down there based on what we're seeing. At least if this liquidity holds at these levels, we may not see we may not get down to the 91s, right? 92 could conceivably, 95 could conceivably hold. However, with this second death cross looming on the daily, I'd be surprised if it does. So I'm not eager to buy here just yet. Now, if I see something change here in the order book where we have volume buying from these order classes, then yes, I would consider taking an entry there. But at the moment, that's not happening. In fact, all but the smaller order class are buying. Are selling. So when I start to see the uptick coming from the masses here, that's when I'll look to place some bids, and I may keyword may take a smaller entry here. If I see that happening, I may take a smaller entry here towards the top of the local support and scale in with larger entries as we go down. So I've got some powder stashed for that, set aside for that, and that's how I'm approaching this. So there you go. Alexander chiming in. He's preparing his dry powder. Exactly. And that's what you should be doing. And you should also be looking for entries relative to, if you're going to trade alts, it's a good time to look for those entries if you haven't already, because as we see Bitcoin declining, lately there's been a lot of talk of like what's happening with alt season. Will we get an alt season? Did we already have an alt season? I did an analysis on this a while ago, and I wasn't really going to dive into that today, but I'm always curious when I see price degrading. I want to see how this dynamic is working, and you can see that we have a dynamic, a divergence developing between Bitcoin dominance. That's the orange line. The candles are Bitcoin price. Bitcoin dominance is the orange line. Total 3 is basically total market cap minus Bitcoin and Ethereum. So this is basically all alts. And this morning, this was ticking up, which was a positive sign for alt lovers. And at the same time, USDT dominance was ticking down. At the moment, everything is going down, and USDT dominance is inching up, which means that the market is a little bit uneasy. Perhaps some of the shenanigans happening with some memes and some, I think it was Argentina, maybe, are spooking the market a little bit. But these are speed bumps in the road, right? It too shall pass as all the others have passed. what I'm watching for and what you should be watching for ultimately is whether Bitcoin, USDT, what you want to see if you're looking for an alt season, plain and simple, what you want to see is Bitcoin dominance coming down, total 3 going up, and USDT dominance coming down. So you want to see Bitcoin dominance and USDT dominance coming down together. Well, total 3 dominance goes up would be an indication that alts are going to rally, or potentially even develop into an alt season. As long as USDT dominance is ticking up, that's an indication that there is some fear in the market, and the capital is not, when there's fear in the market, capital rotates into either and or Bitcoin and or USDT. At the moment, it's rotating into USDT. That's why Bitcoin price is declining a bit. You can see some intersection with this trend line, which this isn't necessarily the macro trend line, but this is kind of a trend line where we have confluence between Bitcoin price and the Bitcoin dominance, RS flips, and total 3 dominance, RS flips. So I'm watching this very closely as well. But what we really want to see is USDT dominance to come back down into this range, and that will either that will show us that liquidity is flowing back into crypto assets, back into risk-on assets. Whether Bitcoin dominance thrives or USDT total 3 thrives, will tell us whether it is going to trigger an alt rally. And if they both move together, then that's just basically, a high tide raises all boats kind of scenario. So if there aren't any other questions or comments, I'm going to wrap it there. I think this is pretty clear cut. We have death crosses, 2 of them. One of them's already printed. Another one seems eminent to me, unless some sort of miracle happens. I don't know if there's a way to actually pull out of this trajectory, unless we just had a God candle and another series of rallies that took us out of this quite quickly. Doesn't mean that this has to develop into a deeper correction down to the 200-day moving average. But you have to watch and make sure that it doesn't, and be prepared for what you're going to do if it does. Again, here's my hot zone. This is not advice. This is just my opinion. This is where I think there's good opportunities to accumulate some more Bitcoin before an eventual breakout. We are still quite early in the cycle, in my opinion, and so I think that there's a lot of upside remaining here in Bitcoin. So with that, I'm going to wrap it right there, guys. Hope this has been helpful for you. If you want some more info or insight on the tools that I'm using, then by all means, check them out. I've got links in the description. Of course, you can find everything at materialindicators.com. Going to leave it right there. Hope this is helping you guys trade smarter, and we will be back at it again tomorrow. I think we have another bit break with Jen and Mark tomorrow scheduled. So we'll give you some more insight there as well. If I see anything developing today that's noteworthy, I'll do my best to keep you posted, both on X and the Telegram chat. If you're not joining us there, find the links in the description. There's a lot of alpha flowing through those channels. Have a good one, guys.